Good evening, everyone, and welcome to the February edition of Digging into the BI. This is where members of the DC regional chapter and the Maryland chapter get together and look at the latest issue of the Better Investing magazine and some other stocks. So tonight we're going to be looking at Powell Industries, NICE Limited, Sysco Corporation, of course that's Sysco Food, and Palantir. So we have 4 new presenters from what we had last month, and we're very glad that you're here. We have a very nice registration, and the attendees are showing up very well. So glad to have you, and let's just go to the next slide, Cheryl. So this is the standard disclaimer inside our community, which is this presentation is for educational purposes. We believe, as Better Investing does, that investors should conduct your own review and analysis of any companies that we discuss. If we do talk about, when we talk about stocks tonight, hopefully the presenters will be able to let you know if they're in their personal portfolio or their club portfolio, but just be aware of that. And again, whatever we show, we're not endorsing or promoting any websites, products, or services. And as you can see down below, this will be recorded and we will put it up on YouTube either late tonight or tomorrow. So let's go to our next slide. A little bit about Better Investing. Again, I see a lot of regular attendees, but since this goes on out to YouTube and you don't have to be a member of Better Investing, here's an opportunity to see a little bit about us. All of the presentations, anytime you see a blue underline throughout this and you have the handouts, and you have to be at the event to have the handouts, that will take you a hyperlink to wherever we have to go. So we are in Better Investing, we're an investment education organization that focuses on long-term fundamental investing. And all 4 of our presenters tonight, including the others here in the background with me, we're all volunteers in the Mid-Atlantic region. So none of us are professionals, we just do this for fun, and we're glad that you're here. You do not have to be a member of Better Investing to participate in this webinar. And if you're just sort of poking around, we're glad you're here. That's what we're doing. Next slide. So here's our YouTube page. So you can be able to find us there. It's really easy. It's at Digging Into BI. And you can find us under that. We're inching along. We're not at a big number, but we are slowly growing. But all of our presentations are put up there and they're organized. If you look over in the right-hand side in the blue box, all the webinars are organized by chapters. That's what YouTube calls. Those are breaks in that. And if you hover over whatever the webinar is inside of YouTube, it will break so that you can just advance to the stock that you want to look at. In return for this free program, we're going to ask you to do 3 things, and they're the standard inside the YouTube community. Like the video, share the video, and subscribe to this channel. We're trying to get up over 225 and we're at 207. So please share this. Again, you don't have to be a member of Better Investing. You just got to be interested in long-term fundamental investing, and that's what we talk about. Next slide. So if you have any trouble, we really haven't anyone ask about trouble with YouTube and GoToMeeting in a while, but those top 2 lines will sort of take you to where it is. The bottom one, the green arrow, that takes you to the handout. So you can open up that window over on the right-hand side, and you can download the 4 completed SSGs plus tonight's slide deck. And you can share those with people in your club, family and friends, people that are interested. We don't care. You can go ahead and share those with them. Those are our opinions. Please, again, do your own research, but you do have all the access and information there. Next slide. So why do we do this? Well, as you can see with this hyperlink up at the top, it's an opportunity to be able to show people that aren't in the Better Investing community how to be able to use the magazine and the resources, and you can get a free 90-day trial subscription if you're not a member already. And then we sort of focus on sort of beginners and people that are uncertain with their judgments, showing them how to use the form we use in the Better Investing community, the stock selection guide. Sometimes we talk about the PERT report, but we're trying to show you best practices of a long-term fundamental investor inside the Better Investing community. This is a joint program between the Maryland chapter and the DC regional chapter. So between those 2 chapters, we cover Maryland, DC, and Virginia. We're trying to promote our model clubs in this area, and we're also trying to promote your club if you're in Maryland, DC, or Virginia through the Club Connect program. So just trying to be part of the Mid-Atlantic community. But again, you do not even have to be part, you do not have to live in Maryland, DC, or Virginia. And I see there are several people from outside that area. Welcome. We're glad to have you, and share this with people in your clubs and in your chapters, or anyone else who want to see it. It's always going to be the first Monday of the month at 7 o'clock Eastern time. I think there's one or two times when we run into holidays, but otherwise that's it. Next slide. So in just over an hour, we're going to go through four stocks, two that are that are featured in the member-only magazine called the BI, which is a stock to study in the undervalued feature. And then we always ask the other two presenters to find something that they can get as a stock idea that they found either through the magazine, the website, maybe your personal experience. But tonight, the other two stocks come from the ticker heat map, but they can come from any of the different resources inside our community. And I know, in fact, Cheryl's presentation, it was on both the heat map and it's also in the Rocky Mountain chapter. So again, a lot of pollinization that happens inside our community. Next slide. So here's how you can be able to find out about the featured stocks. It's always under Home, About Us, and News Releases, and you can be able to see this. This page is free for members and non-members alike. It was announced these two stocks that we're going to be looking at that are featured, NICE and in Sysco, were announced on November 13th. So there's plenty of time to be able to take a look at it. In fact, the ones for next month are already been announced. It's Zotis and LKQ. So we'll be looking at those in March. Next slide. So also one of the things with being a member is to be able to get the announcements that come both from your local area as well as from headquarters. And the way you do that is if you go up to the top and you sign in. This is me signing in. You see the red circle that says my account. If you open that up, it will come on over to the left, the screen capture in the center left, which shows a home my account. And underneath it, you go to the email and product subscription information. And under that green circle, if you go over to the far right, where the screen capture is on the right in the green box, that's where you can be able to get the local chapter news. I have that with the arrow going to it. But also consider going up to the top. I don't have this, I normally have this highlighted in yellow, but the one up on top, the Better Investing Weekly e-newsletter, it's a great way to get information from headquarters on what's going on. And then hit your Save Changes. Next slide. So here's what came out on Thursday. This is only for members, but they highlight stuff that's going on nationally, educationally. This is stuff that comes out around the close of business on Thursday. And if you signed up and you haven't gotten it, check your spam filter. But they have, I think it's in 2 nights, I think on Wednesday, Sam Stovall's going to be doing something. He's from CFRA, talking about tracking tolerance. So that's there. And then we also have a ticker talk that's coming on up, I think I can't tell my own, it's really kind of small in reading. I think that's actually in March and not in February, but a lot of good resources right there to take a look at. Next slide. You can also connect with us in the Mid-Atlantic region through our Facebook page. We sort of have this as a combined one because there's really not a lot of activity for both of the chapters. Really about the only thing I'm putting up regularly is the stuff here from the Digging into BI. But this is free. Again, it's something that can be shared with non-members because the whole idea is trying to be able to reach out with other people that we want to be able to show them the value of long-term fundamental investing. Next slide. Um, let's see, we don't have anyone in the back room here from the Maryland chapter, but they started their portfolio contest, I think just last week. If you have to be in the state of Maryland to participate in it. They've also been doing an in-person SSG class through the Baltimore County Public Library. It started on January 8th. I don't know if it's carried over into February. You have to sort of reach out to their contacts to be able to find that. And then over on the right-hand side, they have a really, really nice newsletter, very professionally done. One of their directors puts it together, and they have a lot of good information there. So if you're looking for an ideas and you're a director outside this area, director's a fancy way of saying you're a volunteer in your local organization. That's you may be able to take a look at that as ideas of how to make a nice newsletter. Next slide. Cheryl, tell us what's going on in the DC chat. I can't hear you if you're talking.
Always helps if I unmute. Besides digging into the BI, we've also got Money Matters. You can look into that, and we would appreciate somebody being willing to volunteer within the DC regional area to carry on with that education. It's always been very highly taken by people and populated, but the person that has been doing it for many years is no longer able to do so. So please, if you can, get in contact with me. My email's later on in this program, and we will get you hooked up with that. Go ahead, Kevin.
Let's go to the next slide.
All right. Come on, be nice. There we go.
For those, again, a reminder, we are volunteers, so sometimes we don't always get stuff. Cheryl, it's right back to you.
Yeah, this is the Happy Destiny Investment Club. I happen to be one of the members of that club. It was started in 2001 with 6, soon to be 7 partners. Next meeting is on February 21st. It's the 3rd Friday of the month, and it is online, and there is the link to get to the club at 6:30, and it runs till about 9 p.m. The education is the continued review of the investment policy statement, or the ISP, and the stock to study is Lululemon Athletica. And the point of contact there is diggingintobI@gmail.com.
And the start time, that's 6:30 Eastern for those people that are outside of it.
Yep.
Anyway, let's go to the next one. And this is one of the 2 model clubs we're talking about. This is the Montgomery County, Maryland Model Investment Club. We started in 2017 with 6 partners. That photo of us, that's a combination that we do. We do a quarterly social event with another club. One of our partners in MCMC belongs to another club. So we get together quarterly after their meeting and have a potluck and just sort of talk about stuff. So that's a view of us. We meet on the 3rd Wednesday of the month, 7 to 9 Eastern. We don't know what our education's going to be, but our stock study is going to be double verify. Next slide.
Gladys, you're up.
We still see my slide. We don't see the new one.
I pushed to it.
Okay, I'm Gladys. Okay, thank you. I'm Gladys Henriksen. I'm with the Model Investment Club of Northern Virginia. It started in 2008. We now have 14 partners. We meet on the 2nd Tuesday of the month. Our next meeting is a week from tomorrow, Tuesday, from 7 to 9 online. This is the link. And our education will be AI trends for 2025. Certainly couldn't be more timely. And our stock study will be Amphastar Pharmaceuticals. And the point of contact is listed below. Thank you.
All right, so we've got
Cheryl, all you.
We got the Club Connect program. This is a new program, used to be Visit a Club, and it really comes at it from 2 different ways. It's for BI members looking to join a club, as well as BI clubs looking for new members. And so if you are of either of those 2 categories, please go to Club Connect. It's there on underneath investment clubs, about the 4th one down. And it's supposed to be a bit more proactive in connecting clubs with potential partners or clubs looking for new partners, as I said. So look into it. Thank you.
And so this is digging into the BI. So we like to be able to look at the magazine itself. This is 1 or 2 times a year where their 2 months are combined. This is January, February. So this came out in early January. And you can be able to find it on your laptop, computer, tablet. I know many of us like to still get the paper version, but electronically comes faster. So please consider that. There's a picture, screen capture of my phone over on the left, but you can also look at it on your computer as well. So consider that as well. Next slide. And so this is when you sign up for the BI magazine for mobile devices, where the green arrow is over on the left-hand side. It's a different sign-in than what you have for your regular membership. But with that, you'll be able to get that information, like I said, about trying to see it on your tablets and the like. The other thing is that red arrow where it has analyst reports and other resources. All of the featured stocks that we have, they have the article will always talk about additional resources, and that's where you can find that additional resources for the 2 featured stocks. So there'll be additional resources for both Sysco, which is the undervalued feature, and then also for NICE, which is a stock to study, as well as for all those going all the way back. So consider that. Once you sign up, you can be able to go to view the magazine issues and be able to take a look at stuff either as a digital online magazine or as a PDF. Next slide. So we always like to be able to feature one story from the magazine. This one sort of caught me because February, back up one, we want to be on slide 20. There we go. We're on 19, let's go up one. There we go. Again, we are volunteers, so we're still learning how to do this. But they're talking about February as Invite a Friend a Month. And it's not so much a membership recruitment as it was started in 1955, but it's a way to be able to sort of bring investment literacy to people that don't know much about it. So it's a great opportunity to be able to reach out to people, just like we do here, and you can do in your own clubs, to be able to just let people know that there's resources such as what we have here in Better Investing. It's not the only place. We're not the font of all things fundamental investing, but it's one place that you can come to be able to get some really good, sound financial advice. And that's what we're really trying to do, is pass on that financial literacy to other people. Next slide. So we also like to feature other chapters, what's going on. This can always be found in the members part of the magazine on page 51. North Florida chapter has been very active over the years doing stuff. And here they have in their stock investment workshop. It's free. It's actually tomorrow night to take a look at it. And then one that's actually next month, it's a little bit further ahead, but it sort of caught my eye, is the St. Louis chapter has a Let's Talk Stocks. It's free from 7 to 8:30 Central Time. But go ahead and take a look at that as a member of BI. There's a lot of things that are free and online like this that you can find in other parts of the country. Next slide. It's not agreeing with us, is it?
I think
I'm still on slide 20. There we go.
Picking it up for, I don't know why.
Okay, maybe it's just a slow buffering here on my side. Anyway, so now we're going to look at the first 2 stocks. They're going to be in core. Cheryl's going to be able to do Powell Industries, which was, again, through ticker heat map, as well as a Rocky Mountain chapter. And then we'll have the stock to study that Gladys is going to do from NICE. So let's stop talking and get them showing us about their stock. So Cheryl, get us started.
All right. Good evening. I'm Cheryl Patterson. I'm the president of the DC Regional Chapter and a member of 2 investment clubs, Model Investment Club of Northern Virginia, as well as Happy Destiny Investment Club. I found Powell Industries, which is a NASDAQ stock, in a presentation by the Rocky Mountain Chapter president, and also on the Better Investing ticker heat map. Powell Industries was founded in 1947 as a metalworking shop to support the local Houston, Texas petrochemical facilities. While they began small, the company has grown to become the strategic supplier of choice for highly complex and integrated systems for the distribution and control of electrical energy and other critical processes. Today, Powell is a global operation with 2024 revenues of $1.01 billion. The majority, 84%, comes from the US, 10% from Canada, and the remaining 6% from the UK and the rest of the world. Their mission is to be the go-to provider for every aspect of electrical distribution system needs. From engineering services, providing conceptual design, to procurement and supply of ancillary equipment, integration of all required resources to accomplish construction and startup services. Focusing on the future of electrical infrastructure through innovative technologies developed by their people for their customers, they stay within projects representing low and medium voltage application and enjoy long-term relationships with repeat customers. Their current 2024 revenues represent a 45% increase from $520 million in 2023. Gross profits of $273 million are equal to 27% of revenue, while net income of $150 million or $12.29 per diluted share increased by 175%, and net new orders totaled $1.1 billion. All this with no debt. Major sectors of Powell include oil and gas, petrochemical, electric utility, light rail traction power, and commercial and other industrials. The graph above shows how the revenue mix has changed from fiscal year 2022 to 2024. While revenues have grown year over year, the current backlog is the effect of order spikes in second and third quarters of 2023 and in the third and fourth quarters of 2024. Also, Powell is consistently searching for opportunities from new technologies, such as the evolving battery storage for everything from homes to businesses to transportation, and moving compressed CO2 from the source to permanent underground storage that all require complex distribution systems. Powell is in the middle of three of the largest megatrends. First, the transition towards clean energy by assisting the oil and gas industry to become electrified and providing custom designed electrical distribution systems to power drills, sensors, motors, and more to bring oil and gas from the drilling point to consumers. Two, in AI, providing massive electrical output to power AI workloads, crypto mining, quantum computing, etc., as electricity demand is forecasted to quadruple. And number three, to meet the demand for electrical products for US overseas companies planning to return to US soil, as it takes at least 3 to 5 years for the planning stage to get to the point where the demand for electronic components is needed. Despite some heavy down years in 2017 to 2018 and moderate headwinds from 2020 to 2021. Powell has managed to return to an up and straight position and in even ahead of their top competitor, EnerSys, and above the industry average in 2024, and remains competitive in year-over-year current quarter. In sales history, it's also driving earnings history with the same results. Powell has stayed the course with pre-tax profits on sales and once again has surged ahead of their closest competitors and the industry average. As you can see, for those that have been looking at the graphs here, Powell is the black line in every single graph. While most of their peers have negative percentages for their last 5-year averages, Powell has a leading 12.08 for return on equity within the last 2 years, reaching 16.5 and 33.7%, indicating superb management. Finally, 0 to single-digit debt over the last 10 years. For the 5-year annual sales growth forecast, I chose 7.2%, of which was slightly under the 7.6% 2-year estimate. 7.2% estimated growth rate will result in a 5-year projected sales of $1.433 billion. That will take them well over their $1 billion revenue in 2024 by 42%.
5 minutes, Cheryl, 5 minutes.
For my forecasted earnings growth, I chose 9.3%, which results in a 5-year projected earnings per share of 19.17, a 56% increase. That is reasonable considering 2023 and 2024 increases, as well as increased orders and backlogs. For a forecasted high price, I chose an average 3-year, 3-high PE forecast of 30.5. That was within the average of the PEs of the last 5 years, and that resulted in a high price of $584.70. I used an average low PE of 16.4. That results in a forecasted low stock price of $201.60. That was below 80% of current price, but well above the 52-week low stock price. I'm sorry that I made a few mistakes here, but I've got them corrected, it looks. So thank you very much, Kevin. Powell is in the buy range with an upside-downside ratio of 3.3 to 1. If purchased at the January 24th, 2025 price of $290.80, total return is 30.7%. And that includes an average yield payout of 15.7%. Today's price was $235.80. In conclusion, Powell is a medium-sized sales growth company. It's also a well-managed company. It's trading within the buy range, and it's maybe a worthy candidate to add to your watch list or to do your own research to put in for a buy. With the current price at January 24th of $290.80 and the price today of $235.80, it certainly is within the buy range. of $297.40 to satisfy an upside downside ratio of 3-to-1 for a 15% total return. And that is the end of my presentation.
Thank you, Cheryl. And again, for attendees that are here, A, we're glad you're here. B, if you have any questions for any of the presenters, go ahead and put it in the question box, and we'll take care of them when we start voting on these things. So we'll wait till that point. But next up, we're going to have Gladys, and she's going to tell us about the stock to study for February. So take it away, Gladys.
Thank you. Good evening. I'm with the DC chapter in the Model Investment Club of Northern Virginia, and my stock is NICE from the stock to study, as Kevin mentioned. Next slide. Next slide. Here you can find it on the magazine cover Kevin showed you on pages 26 to 30. It's a fabulous write-up. Next slide. Here's an overview. It's in the technology sector, software applications, call centers. It's a medium-sized company with 2023 sales of 2.4 billion. It was founded in 1986 by 7 Israeli Defense Force veterans to provide software for logging, recording, and archiving phone calls of high importance. It changes. In 1991, the name changed just to the initials, and it became NICE. And it came up with its first commercial product. In 1995, it had its first large contract. In 1996, it went public. And from 96 to 23, it acquired several software companies, including in 2016, the basis for its cloud platform. Its headquarters are in Israel, but over 99% of its staff are located around the world. Next slide. BI Magazine's rationale for choosing NICE is that it's the world's leading provider of software designed to enhance call center operations. It has strong financial results and is snaring a greater market share. It has a healthy balance sheet and strong cash flow. Morningstar gives it a health grade of B. And there's been a recent stock price drop due to pressures from a number of things, making it a great entry point. Next slide. NICE has 2 basic business lines. One is the customer engagement call centers, 80%, and data analytics for financial crime and compliance markets, that is banks, 20%. Next slide. NICE's flagship customer engagement product is CX Own. This is an industry-leading platform that delivers solutions based on contact center that offer software and workforce engagement management. It includes digital self-service, customer optimization, and compliance, and it also optimizes call center efficiency with data and AI analytics for call volume forecasting and agent scheduling. Next slide. NICE's growth outlook and strategy from Morningstar in November 2024. With only 15 to 20% of contact center agents now in the cloud, we expect strong midterm growth as customers transition into it. From Mark Robertson in November of 2024, NICE has been doing AI since before it was cool. Their total addressable market is increasing at 10 to 20% for the next 5 to 7 years. Then from Markets to Markets in June of 2024, the global cloud analytics market is projected to grow from right now almost $36 billion in 2024 to almost $119 billion in 2029 at a compound annual growth rate of 27% during this period. Next slide. Here are another couple of slides from the NICE presentation. In the rainbow you see, there are some key statistics. To the far left, it has 25,000 customers. It has over 85% of Fortune 100 customers. It's in 150 countries. It has over 8,000 employees, among whom are over 3,000 R&D professionals. And down below, it talks about its strategic pillars. It relies on and is developing software analytics, the cloud, digital, and AI and automation. And with the cloud, they're getting recurring revenue by way of subscriptions, and that is making its income stable and growing. Next slide. NICE's broad customer set and partnerships are illustrated here. On the left are hundreds of global customers. They're adding about 100 a year in such areas as banks and insurance, healthcare, public agencies, telecommunications, and so on. On the lower right, you see there are at least 260 global CX-owned partnerships using developers, application programmers, and interfacers who are working to link their companies to this key platform. Next slide. This is just a recap of their two product lines. You can see in the light gray is the financial crime and compliance area, and the dark blue is the customer engagement call center one. Both of them are growing, but the ratio between them is still the same, about 80-20. Next slide. NICE's competitors, they're actually not competitors, but current peers for better investing. They named Zoom at $4 billion, which is twice the size of NICE, and Zoom Info Technology and Full Truck Alliance, both half the size of NICE at $1 billion. Morningstar's listed small competitors do not have earnings. But potential competitors in the contact center as a service market include large companies like Cisco, Salesforce, and Microsoft. And potential competitors in the financial crimes and compliance market include such large companies as BAE Systems, Oracle, and SAS. Next page. Here are some buy recommendations from key analysts we track. The major one here is from Value Line in December, where on the far left, the red shows you that it gave it a timeliness ranking, means buy, of 1. And if you look just below, it said its price projections are a high of $345 and low of $230 over the next 5 years, with average annual returns of 5 to 17%. Right now, if you look at the very top, it says that its relative PE value is 0.80. Its PE ratio was about 15.3. But on the far right, the circle shows you that Value Line thinks its average annual PE ratio is going to be about 15, so it's coming down. The two bars on the left column all the way down are endorsements from Morningstar in November, giving it a 5-star buy rating, and then at the bottom, a 4-star rating from CFRA in January, buy. Next page.
5 minutes, Gladys, 5 minutes.
Here are some key analyst assessments of NICE. I'm not going to go through them all because many of the numbers are the same, but Morningstar, I want to point out that they think that the fair value is $290 a share, and they estimated 5-year sales and earnings growth at 13 and 16% with an average PE of 26. It was actually 25 today. Next, and then down at the bottom, Zaxo has a little slower take on this, and they estimate 1-year sales growth at 9% with earnings at almost 12. And it does have an explanation for its depressed price movement. NICE's negative share price movement is due to ongoing transition to cloud-based services. The company leads in AI-driven solutions for customer experiences, but they recommended a short-term sale right now. Next slide. Here you see in core the sales line. It's certainly up and straight, and you can see its growth rate through 2023 was 11%, but the first 3 quarters of 2024, the 4th quarter is not in yet. It will be reported at the end of February. Is almost 15%. Next slide. Historical earnings are also up and straight, and with the growth rate over through 2023 of almost 11%, 10.7, but over the first 3 quarters of 2024, over 33%. Next slide. Here you see both the sales line and the earnings line, which are up straight in parallel. And then you look at the I bars showing price, and you'll notice that the current price is as low as it's been in the last 5 years. So this is a great entry point. Down below, it said in 2023, the high stock price was a little over $231 a share, and the low was a little over $150 a share. Next slide. Here we compare it to the peers named by Better Investing. You look at the top left panel, you'll see that the black lines through each of these graphs is nice, and the others are the competitors. And on the top row left, the pre-tax profit is 15%. In the top right, the return on equity is 8%. Both of these are beating their competitors. On the bottom panel, NICE's total debt last quarter was $557 million, lower than most of the competitors, and its debt to capital ratio is a low 13.7%. Next slide. So my forecast for sales and earnings, I wanted to, let's see, the analyst consensus estimates were about 12% for sales and 16% for earnings, but because of the slow transition to the cloud from the Zacks report, I decided to stay with what has been the last 5 years, and I made the growth rate 11%, and I made the EPS growth rate 12%, so it's conservative. Next page. To forecast the high PEs to get the high price, I used the last 10 years of PEs. I canceled out the outliers, and then you'll see in the dotted red line below the 10-year averages. In the middle, the average high was 38, the average low 26, with an average between the two of 32. The current PE price was 25. Next page.
2 minutes, Gladys, 2 minutes.
So you will see that my high forecast on the left, then I used a high PE of 30, just a little lower than 32. And that gave me a high price of 341.40, which is just under the value line 345. And for the low forecast, I took 80% of the price when I did this stock, which is 161, and it became 129.5. Next page. And that gives me, it puts it in the buy ratio, and it is in the upside down ratio of 5.5 to 1. Total higher PE return is 16%, projected average PE return a little over 11%, and the buy price to satisfy the upside downside of 3 to 1 and 15% total return, 169.70. It's about 160, 161 today. Next page. In conclusion, NICE is a medium-sized growth company. It's well managed, as evidenced by its double-digit growth, strong customer retention, low debt, and exemplary capital allocation per Morningstar. NICE is currently on sale, trading below its 10-year average PE. NICE is a buy up to 182.3 or up to 169.7 for 15% return. Caution for analysts, NICE will experience stiff competition from larger cloud and AI firms as they all move into generative AI and cloud-based platforms. However, the industry itself is healthy. NICE could be a candidate for purchase. Thank you.
Thank you, Gladys. Very nice. One thing before we get into the next two is I did have a question come on into the chat box that someone was trying to download the handouts and they couldn't get them downloaded. So if all of you in the audience that have downloaded them, if you can just put a message in the question box to let us know how you're doing, if you're having any trouble with it or if they came through, that'd be very helpful. Anyway, let's go on to the next two. We're going to do the next two in SSG Plus. We're going to start out with Andrew showing us the undervalued feature, which is Sysco Corporation, that's Sysco Food. And then we're going to finish out with Ed is going to be able to show us Palantir Technologies, which has been very popular in our community that came through the ticker heat map. So over to you, Andrew. Get us started.
Okay, hopefully you can hear me.
I can. You're great.
Good. Okay, so my name is Andrew Ober. I'm also a member of the Northern Virginia Investment Club, the DC regional chapter. Sysco is the stock we're looking at right now, which BI Magazine has featured as an undervalued possibility. It's on the New York Stock Exchange, ticker is SYY. And as Kevin mentioned, it's the Sysco Food Company, not the computer chip company. Next slide. So what exactly do they do? The truck, picture of the truck pretty much tells you everything here, but it is a large cap company, a global leader in selling, marketing, and distributing food products to restaurants, healthcare, and many other different types of facilities. When I put this together, the market cap was 36 billion. It's been around a long time, since 1969. And the name also got derived from its initial name, which was Systems and Services Company. And to give you a feel for the size, they have 76,000 employees. Next slide. So I'm not going to read all of these. I'll just pick a few, but you can see they have food, non-food distribution, culinary expertise, and some other items. The main thing in the third bullet, distribution services, which gives you an idea of the scope. They have approximately 330 distribution facilities worldwide. So Sysco delivers products to over 650,000 customers, and that's across 90 countries. And interestingly, even being that big, they actually have 200 in-house chefs. And if you are a small restaurant and looking to expand your cuisine, they actually can provide consulting and so forth. So they're trying to be a one-stop shop. Next slide. This mostly focus on the middle column, kind of already covered that other column, which covers basically all the food products. We're talking about growth for this company is very different because this is a very large company. So niche and specialty products and some of the things you see here in the third party column is what's going to be key to expanding that. And the third party piece is something they're pushing much harder in terms of some of the software that they're coming out of the 20th century, trying to move into the 21st century for their customers that order food. So not just not be limited to just Sysco products. They can actually buy third party products from their relationship software, which looks like it's similar to like an Amazon type software. And non-food is interesting too. They're actually getting into the infrastructure such as appliances and hardware. Next slide. So this slide is really interesting gives you another idea of, they snapped back from COVID and 17% of a $371 billion food industry here in the United States. So that's a big number, and actually much bigger. If you add the other 9 countries to that, you're looking at 470 billion. So even if that 17% number didn't grow, that 371 billion starts to grow every year because this is a growing industry. And as they like to say, as the pie gets bigger, they're going to own more of it. Of course, they want to grow that piece as well. And really the only bad year, if you will, was the 2021 COVID period. Next slide. So in the little chart over to the side, you'll see that blue line. That is Sysco. And the green is all other competitors. So that should give you an idea of the size and the scale of this company. What they aim to do in the next 5 years, in the last 5 years, they've sort of re-engineered the way they operate. And the next 5, it's scaling and technology, purchasing and supply chain, and focusing on a specialty business. So they want to be real nimble for as customer preferences are different in certain areas and as those preferences change. 70% of the sales are in the US, and there's a little table or a little diagram to the right. You'll see 20% is international with a number of regions that they serve. And the Sigma, 10%, that's fast food. That's things like what they do, that's a subsidiary that serves and delivers food to companies like Burger King and Panda Express, Cold Stone Creamery, places like that. So they also provide that service. And in terms of the international market, really the Ireland is the country they wish to model going forward. We'll talk a little more about that later. And France is one of their largest market shares in terms of European countries. So next slide. So pretty much this is a picture of what we just said of the 330 plus distribution facilities and so forth. There's the sales by segment. You can see that in that first circle where you have the 70% is US food, about 20% international, 10% Sigma, et cetera. And then you have this type circle, and this is where they span. They're fairly diversified, but it is still restaurants. But within the restaurants, they're diversified because they run the whole, whether it's casual, fine dining, steakhouses, fast food, ethnic restaurants, and so forth. And then the other areas of types, such as healthcare, such as senior living facilities, contracts with long-term care facilities, college campuses, and so forth. Next slide. And these are the dollars behind those segments. And there's the 79 billion in the 2024 column. You can see that US is the large piece of that. But if you look at the international row, you'll see it's at 7.4% year over year, which is twice of what they're getting in the US, or more than twice. They believe that number is going to grow much faster in coming years and may even hit 9 or 10%. The Sigma restaurant chain is also, in terms of restaurant chains, also stagnant between 23 and 4, but they believe that's a growth area as well. Next slide. And this is sort of their bragging rights here a little bit. Attractive return profile, #1 market share and industry leading in gross margins, in earnings, and free cash flow, return on investment. Very proud of their balance sheet. If they have in that 5 to 6% range of compounded annual growth for both net sales and operating cash flow. So next slide. And this is their estimate. It's a 3-year estimate. They believe their sales growth is going to be in that 4 to 6%, and their earnings per share at 6 to 8. And the total return for the shareholder 9 to 11. They do pay a dividend, so that would be part of the analysis. Next slide.
5 minutes, Andrew. 5 minutes.
Okay, this is the growth area, driving sustainable sales growth. Then in the U.S. and Canada, they still expect sort of that moderate routine sales growth. To the right, you see the core drivers. It's going to be local preferences, chains, specialties, and international. So that's where most of that's going to come from. We mentioned Ireland. Ireland, they like to look at as a models because they have it's a complete comprehensive Sysco model there, where they have their own management in Ireland. They have a complete distribution system, warehousing, basically just about everything you need to operate independently. The other countries they have a footprint in or a presence in, especially France is one of the largest ones they have sales in, but they don't have really that full soup to nuts. So that's one of their goals. And then, of course, they have all these other South American countries and European countries as well. Ireland has grown 40% in the last 5 years. So it's a lot of opportunity there. Next slide. So this specialty area, an international area and high growth specialty platforms was 3.9 billion in sales. I think they said about 4 years ago, and that's at 9.3 billion now. So it's pretty, it's growing already fairly robustly. And these are just some of the things they do. On the left-hand side is a combination of all of their brands. And on the right, these other charts are basically this basically pictorial showing you some of the areas that they either merged or they're expanding, such as Italian cuisines, Asian cuisines, etc. Greco is a company they purchased, Italian food distributor and specialist in Italian products and pizza supplies. The company Don is a company that distributes restaurant equipment. FreshPoint is one that focuses on local produce for restaurants. That's a subsidiary there. So that's this is a big one for them. Next slide. Repurchase, they announced about $1 billion repurchase back at the end of 2024. They've already changed that last week, and I don't have this updated in the slide, but last week they did their for second quarter, and they pushed that up to 1.25 billion purchase. Next slide. This is also a dividend company, one of the better ones. It's a dividend aristocrat, if you will, with a track record of dividend growth for over 54 years. So that's pretty impressive. So it is featured to be undervalued. There is some growth potential. It's not high growth, but there is growth potential. Maybe a little bit of a defensive, steady play, but it also pays a dividend of nearly 3%. Next. And I'm just going to read the top quote there. This is the fiscal year 25 guidance for the first quarter. Basically, they're reiterating guidance that they met. And then the last two green on the bottom, the 12.1 and the 38 are of course, it's only one quarter's worth, but that's the international and the restaurant chain numbers for the first quarter of 25. So off to a pretty good start. Next slide. I don't typically do this many publication reviews. I usually do like 3. I did this because I was looking for an anomaly of something that was different. All of these are very similar. And they're in that 4 to 4.5 for revenue growth, in the 8 to 9% for earnings growth. BI sentiment is also 4.6 to 9. And the BI magazine did the feature on this, and they ended up with 7.4, but I think that was just for this year. These are for 2 or 3, mostly 3-year estimates, so it's not a 5-year estimate. Next slide. So the SSG, so on this, it's a gentle slope upward. It's straight and parallel. You can see the 2020. The analyst consensus estimates in the middle on the right, a little higher than what I would have expected, but that's how the SSG is calculated. So not bad. 4.4 percentage change for the quarter. Next slide.
1 minute, Andrew. 1 minute.
Okay, I chose 4.5 and 7%. The reason 4.5 is obvious. 7% I chose because of I discounted that 9% a little bit because they didn't go out for 5 years. So I took a lower growth rate. Pre-tax profit or return on equity making a comeback. Debt is normal for this industry. It's a little high, but they are capital intensive. Next slide. So I showed the PE right now is about 19, and the range was 27 to 22 in the last 5 years. For my analysis, I chose 15 for the low and 28 for the high, and ended up with an upside downside ratio of 5 to 1, and that puts it in the buy range. That's it. Next slide. And this is just a quick pictorial of the growth over the last 10 years. It's very consistent with what I've been speaking to. Next slide. Conclusion, large company with a growth of 4 to 6%. Long-term growth, again, driven by the international sales, specialty foods, acquisitions. They have recovered from COVID. Current PE is 19, trading below 5-year average PE. Appears to be a little bit undervalued. It's 73.70 when I did this SSG. It's a little lower today. It's a buy up to with an upside downside of 5.1 to 1, and a buy up to $82. And I mentioned earlier it has a dividend of 3%. And that concludes my presentation.
Thank you very much, Andrew. Appreciate it. And last but certainly not least, we now have Ed, who's going to be able to tell us all about Palantir. If we advance up to the next slide and take it away, Ed.
Yeah, good evening, everyone. Next slide, please. So where did I find Palantir? I was noticed before, it shows up in the heat map, but frankly, all you need to do is go to the first page in the BI website, and it's number 3 there under the most active stocks. So you can see there's been a fair amount of community interest in this. Over in the heat map, I want to point out something. There were 1,890 studies generated for this. This will become a little bit important later on. I just wanted to flag that. Next slide. So I normally don't get into the historical background of a company, but for Palantir, I think it's a little bit important. First of all, what does it do? It does big data analytics. So we'll talk a little bit more about what that is in a few slides. The company actually focuses in, its name is derived from these mystical stones from the Lord of Rings. And its early clients were folks in the intelligence community. So basically, the company's been shrouded with some degree of mystery. And to a certain extent, I think that's sort of remained. Next slide. Throughout its early years, it had some difficulties, but you can see here it did pick up some pretty respectable and established clients. They maintained a fairly strong relationship with the federal government and with DoD, but they've expanded to support a variety of other places, including some international clients, the Brits and Ukraine. And despite this early and ongoing success, there's still a lot of confusion about what the company does exactly. And in fact, to be honest, I spent a lot of time trying to get a good coherent view of that, and I like to share that with you. Let's start with, next slide, a little bit about what is big data analytics. So big data is, in IT parlance, not just a lot of data. You'll see there on the left-hand side, there's a number of other characteristics that big data is generally associated with. But then you got to ask yourself, well, what's the value of big data? So on the right-hand side, you have a chart that kind of talks about kind of the chain of value that people will try to derive out of their big data. At one end, it's just, hey, I want to understand what happened. At the other end, and the more complicated use of big data is, how can I use this to influence and guide my decisions in my business? So, let's talk about Palantir and how it does its big data analytics. Next slide. This is a pretty complex slide, and we're not going to go through it in a lot of detail. I've included some definitions for some of the key entities associated with how Palantir does its big data analytics. The one thing I want to draw your attention to is really the thing in the middle, this concept of ontologies. There's a lot of competitors in the big data analytics field. You can Google them and you can see that, you know, there's a lot of competitors there. The one thing that Palantir has done unique, and earlier on it was not well understood, maybe somewhat criticized, was this concept of an ontology. And a real simple way to try to explain that concept is, an ontology is a way that you can basically represent knowledge of domain. And for example, in this chart that you see in front of you, this was out of Palantir's website, and it represents really kind of an energy company and some of the entities that, if you're going to be doing business at this energy company, things that you want to know how they behave, some of their characteristics. So with that baseline, let's talk a little bit about what products does Palantir offer. Next slide. So these are some of the core products that it offers. They actually offer many, many more than these, but this is the foundation of what's there. I want to point to 4 characteristics on here. One is the security and governance. This is really attractive for people in the DoD that have to worry about security. It's also very attractive to people that are in the heavily regulated businesses, like medical, medical as an example. So that's built into their infrastructure. The second thing in the bottom is delivering software. They have placed a lot of emphasis for people to be able to do their stuff very quickly and seamlessly, jumping from one service to another that the products offer. 3, as I mentioned before, the ontology layer, that's part of the special sauce of what they offer as part of basically their Foundry product. And then the last thing is, a lot of you have heard about Palantir being the big AI poster child for success. It was one of the most successful companies back in 2024 as far as stock price. A lot of it is driven by their use of AI products integrated within the rest of their product line. Next slide. So one thing that's kind of unique about Palantir, and when I look at companies, I try to look for what they do a little bit different that might be good or bad. In this instance, this has been a very successful strategy by Palantir to basically, first of all, everyone that has IA embedded in their product kind of touts it. In their case, they have done a very effective job in integrating it within a very mature framework. The other thing that's been really successful for them is that they conduct hundreds of free boot camps where prospective customers come in and they are given an opportunity to try out a use case, some sort of problem that their company might have. And in the course of 5 days, often they are very impressed with what they find. So Palantir doesn't have a lot of traditional salespeople. What they have is the subject matter experts that assist in customers in using their tools and what the ontology has available for them. Next slide. So here's a quick snapshot of a few happy customers. I want to note something. These are examples that are kind of medical in nature, and 2 of them have to do with vaccine operations, both here and the United Kingdom. Also some hospitals. Again, this is the strength of the ontology. The ontology that they've already pre-built and offered to customers include a very strong foundation for people that work in hospitals and work with medical programs. Next. So what do the analysts think? Thanks. What do the analysts think about this? So Morningstar here, this is a recent report, I think about a week old, very, very favorable. It bumped it up almost 4-fold, the fair value estimate. It talks about how maybe Salesforce back in the 2010s could be a model for how Palantir will progress as far as its growth as a company. Next slide. Here I've taken 2 value line reports, put them side by side. Last year in February, they had estimated, you can see that with the blue box, you know, what their prospective target price would be. A year later, it's 40 to 60. Today, the stock stands at $100 after today's massive beat. So my point is, for high-flying companies, it's really hard to rely on the inputs that you get from even professional analysts. So, how do we analyze this company? Next slide. What I've chosen to do is actually rely on the better investing community, and in this instance, I've relied on the sentiment feature predominantly. There were over 300 studies in there. BI in their database took out 82 of them because they considered them kind of outliers and numbers that don't make sense by any reasonable accounting. So on the next slide, you'll see the numbers that I actually, next slide, please. The values that I actually use that I inputted into the SSG tool. There are 2 exceptions. One was the high PE, just that for, it's hard to imagine sustaining a PE at 245, so lowered it to 180. which is still really high. The other thing is the low price. I changed it based on what I normally do is I like to look at technical support levels and establish that for the low price. So when I take all these numbers and plug them in, next slide, what you see is really not so much of a classical better investing chart here. The main reason, and we've seen this before in other presentations, is that the company only recently became profitable. I do want to point out towards the bottom there that, you know, in pre-tax profit, boy, they've really big jump between 22 and 23 in the magnitude of hundreds of millions of dollars difference between those 2 years. Next slide.
2
You
minutes,
see a
Ed, 2
similar
minutes.
pattern on this. Thank you. You see similarly very significant increases in these important management metrics. So that's also a very positive sign. Next slide. So another way to, and this is not a BI technique, but it's something that you'll see as people analyze these high-flying companies, particularly ones that have software as a service, this rule of 40. If you use that metric, you can see that Palantir has been doing great. And even though it's not shown on this chart, today's earnings call resulted in a rating of 81, which is spectacular. So, you know, another way to assess companies that may be hard to assess in traditional ways. Next slide. So when we crank through the numbers, you can see that as of yesterday, it was a buy up to 80. I'm sorry, up to $90.80.
It looks like up to 90.8.
90.8, thank you. So and today it's at after market price of $100.52. So you know, I'm not quite sure with this spectacular quarter that it had, you go out and buy it. So next slide. For stocks like this, you got to really look at the risks and opportunities. One is, I'll reiterate, the PE is astronomical. But there have been examples before of other companies, Netflix, Amazon, Salesforce, that have had pretty high PEs for an extended amount of time. So it's not unprecedented. However, you know, buyer beware. The next thing is this company is well positioned to ride the wave of AI for years to come. And the clientele that it's targeting are people that are looking for efficiencies. So that's going to be a major theme. Next slide. So it doesn't hurt to have influential advocates, particularly Alan Karp is the CEO. There's a lot of folks in the tech domain that have a lot of high regard for Palantir. So not quite a foundational, a fundamental metric data point, but it is something to bear in mind. Next. In conclusion, basically, it's a medium-sized company. It's growing extremely fast, recently profitable. It's well managed, and it's riding that IA wave very well. It was a buy up to 90. It's high-risk company with a very high PE, and basically, you know, this would only fall under the category of a speculative buy for an individual or a club. But you know, multi-baggers are not easy to find. So this certainly has the potential for it, but buyer beware and keep your eye on it. Thank you.
Thank you, Ed. Appreciate it. Yeah, that had to be a tough one to do because it doesn't look good in our form. But anyway, so here's what we've did is we've, but you're the man to be able to take care of it. So what we like to do is we like to ask all of the presenters sort of where their stock fits in the life cycle of the company. And if we go to the next slide, we'll be able to see it. This comes from T. Rowe Price, and he always talked about how earnings for corporations pass through a life cycle just like a human, where there's growth, maturity, and decadence. And this image is quite popular in our community. It's in the digital handbook. It's been in other books as well. So let's start here. And Cheryl, tell us why you picked that location for Powell on this continuum.
Well, based on where they are, they were a small company up until not too long ago. They're now a medium-sized company. So I feel like there's still explosive growth based on the product that they offer and the things that the questions and answers that they've gotten from their community. And also, as I said, they're in the midst of those 3 mega trends that I talked about.
Okay. And Gladys, tell us why you picked that location for NICE.
Well, NICE has been around for some time, but it's only recently gotten it since about 2016 when they got the new platform CX Zone that they have really been growing a great deal. And the fact that they are growing at about 100 new customers a year, and that they are moving rapidly into the AI platform and cloud platform and are selling their services as subscription. I think that there still is room for growth, especially because that field is growing so strongly, as the other presenters have mentioned too.
Okay, thank you. And Andrew, tell us why you picked that location for Sysco.
Yeah, so Cisco has been around a long time, very large cap company, a lot of employees. We covered a lot of that. We looked at the 10-year numbers too, and if you notice, when you saw that the sales growth was in just, I think it was just over 4%. You know, that's sort of like that bottom line of the large cap companies in terms of growth. So it basically returned, you know, it's not a company that's going to have explosive growth at this point. It's just, you know, it has to look overseas to maintain or grow a little bit faster than where it is now. So it returns, you know, the investment back through the shareholders through dividends, repurchases, you know, at the expense of a little less growth.
Okay. And Ed, tell us why you picked that location for Powell.
Yeah, basically it is consistent with the expected PE being so high that the growth has to be explosive for it to kind of have any sort of reasonable or somewhat plausible case. So I think you see these numbers already in the last few years, and you're seeing, you saw them this afternoon when they announced their fourth quarter earnings for 24. Thanks.
Okay. Thank you very much. So we've done all this. Let's go one more slide. And now it's time for you, the audience, to be able to sit there and vote, not so much which one you want to buy, but which one has intrigued you enough that you want to do additional research on your own. Because again, we recommend that you do your own research and not take our recommendations. So let's release a poll, Cheryl. And by the way, we've had a wonderful turnout tonight. Probably our biggest turnout in almost 2 years. So thank you to all the people in the audience. Very much appreciate it. And the poll has been released. You get to vote only once. So do your best with that one vote, and let's see how we're doing right now. We have just about 50% of you are voting. Let's see, we usually like to get up into the 70s and 80s. We just crossed 60. Let's see if we got a few more. We're having someone make a little bit of a run here. Let's see, we're at 65. Can we get up over 70? Come on, folks. I need a couple more votes. Give me 2 more votes. You can only vote once, but we'll take it. We're just short of 70. Looks like it's holding off. Okay. 5, 4, 3, 2, 1. Let's go ahead and close it out. And share the good news. So, okay. So Powell Industries was the winner. You got Powell jumped out to the early lead, and no one was able to catch Powell Industries. So thank you very much for all of that. And again, if you in the audience, if any of the companies that sort of intrigued you, if you have any questions for the presenters, now's the time to raise your hand, put something in the question box. We'll open up your mic if you want to be able to do it that way, and take it from there. So Kent, do we see anyone that's raising their hands or asking any questions?
Oh, we have quite a few good questions here. So one on the Sysco presentation regarding question, was it GAAP data or non-GAAP data? And right, yeah, especially if, yeah. So the question was from Reddy, is the Sysco EPS data GAAP or non-GAAP? Suggest using the non-GAAP data from value line if there's any one-time deductions like tax breaks, lawsuit settlements, etc. So that's a question we can throw back over to Andrew.
If I remember correctly, it was non-GAAP. You know, I did this a few weeks ago, so I have to go and look again. And is that for the earnings?
It would be for everything. It would be for
Everything.
I mean, you use the Better Investing data, correct?
Yes.
Yeah. So again, if the way Reddy's talking about this, it sounds like he wants to use sort of the smoothing out that happens with value line, which is something you can clearly do, but you'd have to manually put all that stuff in there.
Right.
And do you want to give us the next question there, Kent?
So there's one for Michael asking, what is LLM? And I'm not sure which presentation that was for, whether it was for...
That was me.
Okay.
Yeah, LLM is large language model. And the example that most of you will know of is ChatGTP is considered an LLM. For these guys, I think that is one of two models that they're using as part of their product integration.
Yeah. Okay. And also, I think with Palantir, there is that challenge in 2022 of having a negative EPS, and so that needs to be taken good care of, as Ed did. Let's see. All right. So we got on how to download files.
Again, people can raise your hand if you want to ask a question orally. You can do that.
That is true. That is true.
Everyone's kind of quiet. We want to be able to make sure that since we have the people here, go ahead and ask your questions.
Yeah.
Don't see any.
Oh, let's see. And then there was a comment about the selection. You know, more questions or suggestions on the selection of the PE for Palantir, because yeah, especially for a company that's growing so fast, and it's like, how did you come up with that 180 PE? I think is
that would be for Ed.
Yeah, for Ed, as opposed to say a 100.
Yeah, you know, if we're using the BI orthodoxy, Ed, as you know, a lot of people don't like to go any higher than a high PE of 30, and you'd never be able to find the stock at that rate. And what was the way you sort of did as a workaround?
Yeah, so I zoomed past that, but as a reminder, all my numbers except for two, and the high PE was kind of in the dialogue, were out of the sentiment data.
Right.
So these are actually numbers that were used in other SSGs that BI has in its database.
And the 245 that you had was out of the sentiment data as well, right?
That was an even larger number that I felt that I didn't feel comfortable with. That's why I actually used 180.
Right. Yeah. Okay. Yeah.
Yeah. So yeah, I agree. I mean, and these
are
numbers that are supposed to be sustainable for a long time.
Yeah.
So Ed and I were talking about this stock and how to use the member sentiment, and yeah, there's like 250 completed SSGs on this, and that's not including the ones that were obvious outliers, the ones that had really high numbers. So it was a good way to sort of take a look at things. And yeah, Ed, I think that was a great way to sort of do a workaround.
Yeah. So, all righty.
All right, so let's just keep moving on here, Cheryl. Let's go to our next slide. We're just about done here, folks. And again,
Okay.
thank you
There
for
was one more
attendees.
question.
Are you there?
There's one more
Oh,
question about the
actually,
rule
yes,
of
there was
40.
a great question here. And that was, can you please explain the rule of 40, Ed?
Yeah. The rule of 40 is basically a recently contrived metric used by a investment banker back in 2015, where basically what you do is you add the revenue growth plus the profit margin, typically which uses the EBITDA profit margin. You add those two numbers together, and if it's above 40, it's considered to be a sustainable high growth. You're not sacrificing profit for too much growth, and on the other hand, you're not sacrificing your growth for having a high profit. So it's one of those optimization type of things where you want to be somewhere in the middle, and 40 is the number that they use as a ballpark for whether or not you're a good, sustainable growth, high growth company.
Yeah.
And as Ed was talking about that, what I like to do when I hear a term like that is I typed in just a search window. I use Google. I put in investing in rule of 40, and the AI that it came on out gave me 2 or 3 really good sources to be able to look more about that. So something to take a look at when you're looking at one of the more explosive growth companies like a Palantir. Any other questions, Kent?
I am not, that was, I think, the last one. Let me just do a quick look to make sure I didn't miss one because I keep having things flash up. Nope, that was it. That was the last one.
Well, then you
Oh,
got this slide, Kent.
all righty. So, as was mentioned several times by Kevin and by Cheryl, the work that we do is all done by volunteers. None of us is getting paid a huge salary for this. In fact, we're not getting paid much of anything. However, as what we are getting and what we are learning is some new skills, as in the rule of 40, which is a brand new one on me, so I'm gonna have to go look that up, as well as we get a chance to help educate others and provide a really good service to the members of our community. As a thank you, though, BI provides discounted rates to national training as well as the Better Investing National Conference. So you might want to consider that, as well as complimentary subscriptions to the BI tools. So as a chapter volunteer and a chapter director, you can actually get those particular subscriptions for no cost. So that's one of the reasons that you can volunteer, or just giving back to the community is one of the reasons that a lot of us volunteer. Next slide, please.
So here are the stocks that we're going to be looking at next month, which will also be March 3rd. We're going to be looking at Zotis, the stock to study, and also the undervalued future, which is LKQ. We have 2 other stocks, one that's coming from a person's personal portfolio, Qualcomm, and another one that came from, I think it was both on the ticker heat map and on the Mid-Michigan Roundtable Double Verify. So those would be the 4 stocks we're looking at. I want to back up. Kent was talking about some of the national events. I just found out that the national convention is going to be June 7th and 14th. It's virtual, which they rotate now between doing one virtual and doing one in person. So it'll be over those first 2 Saturdays in June. So as BI members, take a look and you'll see some of the stuff coming out on it. But here are the stocks we'll be looking at in March. And I think we have just 1 or 2 more slides, Cheryl.
Yeah, you definitely have a delay, Kevin.
Well, why don't you take it from here if we have this glitch?
Well, we have a Manifest Investing dashboard. What Kevin does is he takes it a year at a time, and he will look at all the stocks to study in one section, and then the undervalued features, and then the non-featured stocks. and he puts it into a year by year, and then we look at the winning selections chosen by the audience for each of those years. And it is definitely a unique way to look at the different stocks that we're picking here. And here is a way to get to the public dashboards. You just click on the hyperlinks and they will take you either to Manifest Investing Public Dashboard, or you have it also hyperlinks for the individual selections by the audience there and the winners. Back to you, Kevin.
Okay. Thank you very much. Yeah, so here's our final slide. Any other final questions that we see, Kent, or are we pretty much caught up?
Nope, we're just getting lots of folks who are very, very thankful for the program work that we've done. So that's nice to hear and nice to see. And we thank you all very much for attending. So
please make sure to download those handouts that look like the problem I had with one audience member no one else has had. That's good. This should go on up either late tonight or tomorrow. Since I seem to have a buffering problem with mine and the audio was off for me, Cheryl, make sure to download this too, because my recording won't be as good as yours. But anyway, this is a hyperlink that you can be able to go to our YouTube page. We'll keep this open for another minute or two so you can make sure to download your the presentation and the slides. Go ahead and share that with others. But other than that, thank you very much. We had a very good attendance tonight, our largest, like I said, in almost 2 years. And we appreciate it. And we'll see you next month. And please come back and talk stocks with us back then. Good night, everyone.
good night, everybody.
Good night. Kevin, stay on and help me to get things over to you so you can, my recording over to you.
Sure. I'd say the biggest thing, Cheryl, is once you download it, is you can put it up like on Google Drive and add it to the digging.into.bi Gmail account. And if you share it with them, then I can be able to get access to it and I'll be able to upload it to YouTube. Because
Okay.
I have to upload it through that email address rather than my own personal email address.
Okay, so it's digging into the BI email.
Yeah, just download it and just put it up on your Google Drive. It's probably going to be massive, and then put it. And then, but if you put it up in the drive, then I'll be able to get access to it from that email, and I'll be able to get it up onto YouTube from there.
Okay. Well, if I have a problem with the with getting it onto the ladder, then I'll give you a call.
Okay.
Alrighty.
And I see we have trouble still in the audience. Marty is causing us trouble, Mr. Cincinnati.
Hey, Kevin, if I hit leave webinar, I'm good. Just don't hit end webinar, right?
No, just not leave webinar for all. Just you leave the webinar.
Yeah. Okay. Well, cross your fingers. Here I go.
All right. Marty, I unmuted you, so if you're still around, open up. Say hello. Maybe he's just in the background.
Oh, Ann Bradley is on.
Yeah, I saw that. We had a really again overall very, very good attendance.
Oh yeah.
Marty, you're unmuted on your side. How's life in Ohio? Are you in Ohio or you're an Indiana guy? Can't hear you if you're speaking, and your microphone's up. Darn.
Maybe it's another.
I hope you're doing well. Yeah, we've had some audio problems. There you go. I think it just came through. No, don't have you.
Well, we're glad you came.
Did you hear me now?
Yes.
Yes.
Okay.
Yeah, now we can. How are you,
I
sir?
had to choose the correct microphone. You know how that is. Hey, you guys put on a great show. This was very interesting this evening. So, and yes,
Have you been here before, Marty? I thought I've seen you here before.
I don't remember if I've
Yeah.
attended one before or not. Maybe a while back, but I don't recall. You know, when you get to a certain area in your life, you don't remember everything so well. So you're not there yet, I'm sure.
Well, you know, like you, where I'm not admitting to anything greater than 62. How's that?
Okay, we'll take that.
Old enough to
and what,
recognize I'm old, but not that old.
all right, that's okay. So I hear
So
you, I seen you had Ken on there tonight. Hello, Kent.
I
Yeah.
think he took off. It's just Cheryl and me. Yeah. Yeah.
Yeah.
Kent
Okay.
was one of the people who started this. He was in the Maryland chapter at one point, and then helped start their model club. That's how we got this thing started almost, what's that,
Okay.
4 or 5 years ago. And then he and his husband moved down to Huntsville. And so now he's down there. So he's on the BIVA board with you, right?
Yes, he is. Yes, yes.
So
Well,
yeah,
he's
he's
not on
sort
the
of
Bible.
regularly
He's
keeps
not on the
track of stuff
Bible
for us here.
board. He's a regional manager for our chapter.
Okay. Yeah.
But he may have been on the Bible board at one time, but he's not there now, I don't think.
Okay.
So, but anyhow, he's a good guy. And you're a good guy. Carol's a good gal. You guys did a great job.
Well,
Well,
thank you.
it does take a lot of work, but you know, this is sort of what I think people like to be around our community, is to talk stocks and not to be able to do, like, you know, rechartering agreements or, you know, all the other administrative stuff that goes on with running a club.
Yeah, there's no doubt about it. This is very interesting, and you guys had some good presenters, and you know, I being in the position I am with Better Investing, being the web approval in the web approval team, I see a lot of events. And if I were to take time to visit all that I see, I would be up 24, you got 48 hours a day.
Well, Joe
So,
Farrell, I know, goes to so many of the different model clubs. And then there are others I know that are regular attendees, like Brian Koenig, of just about
yeah,
any event anywhere.
yeah. We've had Joe attend our clubs in Cincinnati, the OPI chapters, Cincinnati Model Investment Club. He was there. And I think one time recently, Bob Hull attended the Dayton Model Investment Club meeting a couple of months ago.
Yeah,
So,
Bob Hool gets around too.
Mhm.
yeah,
You know.
yeah, definitely. Yeah. So,
Anyway,
okay,
well, you sound good, and
congratulations on a good presentation.
and we'll see you next month. But yeah, I'm really happy that we've had like almost 40 different presenters, and almost all of us at one time were in either Maryland or the DC chapter. Some of them have moved away. We've had a couple people from the BIVA board, Linda Hunt and Denise Kimberlin, who both used to be president of the DC chapter, have made presentations.
Mm-hmm.
So
Yeah, very good.
anyway, so it's
right.
great to be able to reach out and get all these other clubs to get involved too.
It's always good, definitely.
So anyway, we'll see you next month, and be well, sir.
I am going to share this with a friend of mine so he can watch the YouTube video tomorrow.
Very, very
So
good.
we'll
Okay.
take it from there. Thank
Have
you,
a
Kevin.
good night. Sure.
Take care. Bye, Carol.
Bye-bye.
I think we can close it down.
Yep, I'm a doing it. See ya.
Yep.
I know.